Good morning, trading world. It is December 9th, 2021, and it is 7:36 a.m. here on the East Coast. The title of this morning's pre-market outlook is "The Market Needs Buyers to Go Up, but Doesn't Need Sellers to Go Down." All right, here's where we are. I've pretty much started off the last few pre-market outlooks exactly the same because I have been doing exactly the same thing every morning. I start off by watching the leaders, and by watching the leaders, which are Apple, nvda, Tesla, XLF, Amazon, Google, it will give you a heads up on what's going on in the market, because if something happens, it will happen with them first, because they are the ones that are holding the market up. I use the S&P 100 and 500 as sort of a benchmark. And when you have a basket of 500 stocks and 490 could be down and 10 are up, and we're able to hold in place, number one, it's a sign that those 10 stocks are carrying way too much weight. And it gives you something to look at to kind of determine the rise and the fall. So I want to warn you this morning, as I watch Apple, nvda, Tesla, XLF, Amazon, and Google, you have to be careful. Let's take a quick and closer look at nvda. Now, I've taken everything off. Let's just look at price action. What we see here is that nvda is failing to make higher highs. It is failing to make higher highs. We can actually, let's do this on a, there we go. Looking back for quite some time, nvda is failing to make higher highs. Now, let's go to XLF. The financial sector. And if we look, the XLF is struggling as well, at a point where it is struggling and seems to be unable to make higher highs. The next one is Amazon. And actually we can even go, I should have did it on a higher time frame, but as you can see this week, Amazon too is struggling and has not made higher highs. And if you can remember, in our 1, 2, 3 criteria, one of the first parts of that step number 1 is a trend break and an issue no longer being able to make higher highs. This is the start of the break of a trend. So when I say looking at the market leaders, Apple, nvda, Tesla, XLF, Amazon, and Google, they're starting to fall off one by one. So if we look at an advanced decline line of the past few weeks, let's go back 2 weeks, through the rallies and the falls, through the rallies, these stocks have been what has led us up, or are keeping us up right now, because we haven't gone anywhere for a while. But these are the stocks that are keeping us up, which also means they're going to be the ones leading us down. So if they start falling off one by one, eventually there'll be no one left to hold the market up. I just wanted to focus on that for a brief moment to let it sink in, to see exactly what's going on. So these are your market leaders, and they are all struggling no longer to make higher highs. Now, back on December 3rd, I titled the pre-market Christmas Rally, Possible Flaky, the start too soon could equal a fail. The battle to me is still with fund managers trying to hold on to gains to get their year-end bonuses. So whatever the leaders are, whatever the prettiest charts are, they've thrown a bunch of money behind it in hopes of holding the market up. But something that happens when we get to this stage, some people like to call it a lack of liquidity. It's pretty much where the buyers dry up. And in order for us to stay in an uptrend, we have to have buyers to keep pushing us further and higher. There has to be buyers behind the market, or bid under price, in order to keep us pushing higher. But in order for us to fall, we don't have to have sellers. It just has to be a lack of activity. And we get these air pockets, so to speak, in the market, where there's a lack of liquidity or a lack of buyers. So we just fall through these air pockets where there's no buyers. And that's why we get these big sudden drops, because we're falling through these air pockets where there are no more buyers left to kind of catch us. And we're going to see a lot of that over the next week or so, and more to come in the future. So that's my quib on what's going on. Let's get to the actual market or pre-market look at the SPY. One thing before I get into it, this morning we have news. We have a report. The jobless claims come out at 8:30. This could shuffle the starting point for today's outlooks. As I was writing this, we were trading at 467 area. When that report comes up, it could jump us back up above 468 to 469 area, or it could take us back to the lows of the overnight session. I just want to give you that warning. Let's get to the key levels to watch for today. All right, here we go with the key levels of support and resistance. And forgive me, I'm using a different chart, so things don't really line up. So don't pay attention to the actual prices over here. But these are the levels of resistance for today. The Jack resistance is 468, Queen resistance is 469, and King resistance is 470. Our Jack support is 466. Our Queen support is 465, and our King support is 464 down to about the 462 area. Now, the battle zones for today. If we close above 469, we could push higher and possibly be in the running to go test the all-time high again. To the low side, the battleground is 467. We battle out at this 467. We push lower to hit 466 and possibly 465. So that 467 is going to be the battleground area for the morning. Now, let's get into today's scenarios. All right, here you have our first scenario, which is going to be likely a trend down day structure. We're going to start gap down pretty far. We have a pretty big gap from the overnight session so far, but kind of looking at things with the jobless claims report coming up, that could be a catalyst to kind of propel and push us back up towards yesterday's close of 469.452, but somewhere possibly in this 468 area we find resistance, and we'll probably spend a lot more time than normal, than a normal trend day, chopping in this 468 area before taking off back toward the support levels somewhere between 466 and 465, where we'll reach that midday chop area and filing through there through the lunchtime chop, and then probably getting a head fake to push lower, but really end up the second half of the day with this kind of faint fade back up until the close of today. So that's the trend down day structure that I'll be looking at, and I'm kind of preparing to spend a decent amount of time in the morning in this 468 area. Yeah, that 468 is definitely going to be a battleground. All right, the second scenario to prepare for today is what I like to call a change day or rounded reversal day. We're going to come in, usually if we're going to have a down change day, right off of the open, we're going to usually take off down or have that downtrend start. But there's so much activity around this 468 area, and especially with the jobs report coming in, we may get like a small rounded reversal of our own before the opening to get us moving toward that downside. Kind of a springboard and then into a fall. And that's going to take us to a support area somewhere between 466, 465, where we'll find our midday chop. And then we start the second half of the day where we have just as a powerful move as we had coming down, we'll have a similar powerful move going back up on the change day. And things to look for on the change day is that diverging volume off of the opening will look, whether you're looking at volume, everything should be diverging, especially your indicator. When it comes to the actual indicator, whatever it is that you're using, you should come in and see a slight trend in it ever so slightly coming into the morning, and especially during the midday chop. And that's going to let us know that, give us that clue that we're going to head back up. So that's scenario number 2. Scenario number 3 is pretty much a range day. Range day can have lots of different variations. So the key part of a range day is that we establish some type of high or temporary high or temporary low, and we usually chop between those areas. But with all the volatility, that pushes our range days to be these strange hybrids or variations of a range day where we establish a high and establish a temporary low, and we push those boundaries. So if we establish a low here at 468, we bounce off of 468, find a high somewhere, 467, and we find a temporary high at 468. The next possible test of this 467 could be could push through and push us a lot lower than the 467, and we find a new low and bounce off of that and continue our chop. But these range days are there's so many variations, and they get very strange in high volatility environments. because it's usually very easy to look for 2 points to create the high and 2 points to create the low, and we find some type of midpoint to trade towards. So if we're buying off the lows, we trade towards the middle of the range. If we're buying off the highs, we look for trades back toward the middle of the range. That's usually how we trade on range days. So those are the 3 scenarios to be prepared for. One of the things I want to reiterate, in my eyes, it seems as though history will rhyme this year, and it's going to rhyme or take a play out of December 2018. So with that being said, at some point I am looking for a very sharp dip, and then eventually a equally sharp rally after Christmas. So just putting that out there, those are things that I am looking for, or how I see the end of the year playing out. So with that, as always, know and understand and define your risk. This is a very volatile market. Even though volatility has kind of crept low, we're still above 20, and that still says danger. So be very careful. As always, wishing you a successful day of trading. Have a great one.